What's going on, everyone? Philip here from BlackBull Markets. Hope you're doing well. In this video, I want to talk to you guys about a pattern that's not so, let's call it textbook technical analysis. Now, we know we have our basic technical analysis patterns, things like double tops, head and shoulders, zones or channels, and all those sorts of things. So this one is a little bit different. It's a little bit more adapting to the market. We do know Forex is an ever-changing market, so the zones still hold up, but the patterns might slightly differ and might not be as crisp and as clean as they used to be when we had a very select niche group of traders. All right, so make sure to stick all the way through to the end of the video to see what this pattern is. We're going to be looking at some real life chart examples as well. So I break the pattern down for you guys and then look at the markets to see, how we can use them in the markets. I haven't looked at the charts at all yet today, so we'll jump through a couple of charts and actually see real life. I want to show you guys sort of pick them up and what they look like in real examples. Also, make sure to smash that like button and subscribe to the channel if you guys are interested in learning more about Forex and improving your current trading skills. All right, so without further ado, let's jump onto the board back behind me and let's see what we have. So the chart pattern or sort of structure that I want to talk to you guys about is called, I like to call it a zone re-entry. Now, this can be anything usually from a head and shoulders pattern. Is a very basic, obviously, this is a normal sort of technical analysis pattern. This is the most basic form of it, but obviously we're going to adapt it a little bit slightly. All right, so you guys do know, if you've been watching our previous YouTube videos, I'm not too fussed about this neckline. All I really care about is the shoulder line. Now I've changed that a little bit as well, where I don't really care too much about this zone, where I'm mostly looking at focusing on this little area over here. Now you might ask, now how can I know whether this is going to be rejected if this isn't here? All right, so let's have a quick look at what I'm sort of looking at in the markets when I look for these zone re-entries. Now this can be either to the top or to the bottom. Okay, so for this example, I'll have a bullish market and then gets reversed into a bearish market, just for example. So from top to bottom. Okay, we're going to be trading those tops. All right, so first of all, obviously we're going to have a major support/resistance zone. We always know, as traders or any sort of swing trader, even some day traders, obviously we trade from zone A to zone B. Okay, this is all where we're trading with inside, and obviously we have our patterns we might have that can help us to rejoin into these areas, head and shoulders, double tops, so on and so on. Okay, also the nice thing that is quite handy about this pattern as well, guys, is it does help you to kind of avoid false breakouts. All right, so generally speaking, the reason why I don't like to trade pure breakouts is because they might not always be confirmed with a candle close like they used to be. So let's say, for example, we have a double top. Now this market might break out. Okay, people might take their trades over here. Obviously stop losses will probably be below any support or resistance zone, and the market might reverse and push further to the downside. Okay, and this is a false breakout, and then you might have gotten a little bit burnt. So I try to not trade breakouts straight away. I do avoid it because the market obviously most of the time does reverse. So just a quick update. So it does, when it does break out, we tend to I would say recently I've seen about 80% of the time the market does come back, reject on that zone, and then push further higher. Okay, sometimes the sellers might be a bit too strong and they might actually come back down, and there you guys can see is a bit of a head and shoulders pattern that does play out. So let's have a look at this pattern that I am looking at, this called zone re-entry. Okay, now generally what I look for is I want to look for any sort of resistance where let's call it the new lower high can reject. Okay, so that's how we define a pattern, right? Or a trend, right? We have, in this case, a downwards trend. We have lower highs and lower lows, for example. Okay, and that's how we start to define a new trend to the downside, or obviously vice versa, to the upside, higher highs and higher lows. All right, so I'm going to initially be trading that first lower high. Okay, so we might have the market coming back down, pushing back up, and I want to start trading in that first lower high. Now this could be a bit difficult because sometimes the market, how do you know if that's the first lower high? How can I use that, or what can I look for to identify whether this is the initial move? Because sometimes the only time you can catch it is on that second lower high, and you might have missed, you already missed this entire move to the downside. So let's jump into that section right over there. Okay, so generally speaking, the first example I want to be looking for is your basic sort of head and shoulders pattern, but I'm not too fussed about the neckline like I showed before. Okay, so we might have the market that comes up, we have our general structure with a nice little head and shoulders, or our first, let's call it this neckline, which again I'm not too fussed about, but we have this nice shoulder line. Okay, so that's the first basic example that I'll be looking at. Market might come down. No, I don't really care how far, if this neckline goes all the way down to reach this zone here, so I don't care about that. As long as I can get a rejection on that shoulder line, I'll be happy to go in my trade to go there. Now, when I take this trade, my stop loss has to be above both or whichever one is the highest one, okay? So if this one is the highest, my stop loss will be above it. If this one seems to be my highest, my stop loss will be above there. Okay, now obviously we're going to look for candle confirmations. I'm not just going to take the trade once it just touches there. I'm not going to take it and then just take the trade straight away, because it could very easily be rejected of this consolidation zone and the market could go further higher. Okay, so I'm looking for a confirmation, either, you know, let's call it an engulfing candle we might want to be looking for example. So I want to see something that might look like this, right? Engulfing candle, the market could, you know, continue further to the downside. We might see something along the lines of this, which is also a very nice pattern of mine. I like this triangular structure and the wicks to the upside, obviously entries, stop losses above whichever high that is, and then continue further to the downside, okay? So I always make sure that I do look for those confirmations. So that's kind of the first basic structure I want to look at. I'll just draw it up here so you guys can see it a bit, you know, just keep it in mind. So obviously we've got the market coming up, we have a break of the high, we have the rejection, that zone, the market comes in, it can come back in, and the rejection, that doesn't matter where the neckline is. It might look like that one over there where the neckline doesn't quite reach it, or it might look like that as well. So I don't really care where the neckline is, as long as I get a rejection on that shoulder level. All right, so that's the first example. All right, the next example gets a little bit more challenging, because this is where we eliminate that shoulder, where that shoulder is not present. Okay, now what we're going to be looking for is the internal structure of that head structure right over there. Okay, that's what we're going to be looking for. So the market comes up, we don't get anything, but the structure at the top kind of does something along the lines of this. Okay, so we have, obviously this is a much bigger picture, but we have, let's say we don't have this, this is the shoulder line that we generally want to look for. Okay, so you want to see something like this, and then obviously we have that shoulder level, okay, where it rejects on this resistance. But now we don't have this. Okay, the market just goes straight up and doesn't give us that. Now you guys can kind of already see where I'm going along with this, because what we have now is we have this internal support / resistance zone where the market is looking to reject. So that's what I'm going to be looking for. So I'm going to use the same sort of setup, where I have obviously my confirmations, candlestick confirmations or anything along the lines of that, where I reject on the zone and then the market pushes to the downside. So that's what I'm going to be looking for. Now the stop loss on this can vary, okay, and depending if I have a very strong rejecting candle, if it's a very weak rejecting candle, I would like to have my stop loss above the zone. Okay, if it's a very strong candle rejection, I'll have my stop loss just above that zone. Now when I say strong candle rejections, those examples that I had before. Okay, so obviously big wicks to the upside, you know, we have anything that looks, like I said before, anything, especially if I can get like an engulfing candle on this, that'd be great. Okay, so this is a very strong confirmation for me. Weak confirmations can be anything, let's say you've got the market coming to the upside, okay, and then we just have something along the lines that looks like this. Okay, that for me is a weak confirmation, okay, because it's closed on the same level, it's not really a confirmation yet. We can easily still do this and go further higher. Okay, so that's a weak confirmation. Strong confirmation with, you know, would be with big wicks and big rejections and everything. That's a strong confirmation for me, with a very strong engulfing candle as well to the opposite direction that I want to trade into. Okay, so that's the other example. Now the last example is not as common. I don't trade this one as much because it is a little bit more difficult to pick up on. The market might reject it as well. But the other structure I do want to look at is, let's say for example we have the market coming down, okay, and then we have it sort of, you know, coming back up again into the zone. Let's say we push it back down, goes up, and then it comes back down into this area. Okay, now you guys can see again we've got a very similar structure. That consolidation zone, market rejects on that, and then pushes back down. Now this is a fairly nice one. It's not a trend reversal, but rather a trend continuation. We actually had something very similar to what we have had over here. Don't know if we can really, I'll show you guys now when we drop onto these, but you guys can sort of see we had something similar over here. We had that consolidation zone, the market rejected and pushed back down, but we did actually have a head and shoulders now that I just saw that. Okay, but we'll jump into some live market examples. Okay, so that's kind of the one structure. So that's the last structure I want to look at. So let's hop onto the markets and have a look at some real life chart examples. Now like I said, I haven't gone through these charts yet. I've actually been very lazy in trading. I had a pretty relaxed start of the week, so I have not actually yet looked at the charts at all today, or this week rather. So I am looking at them fresh and new for you guys as well. All right. So this is Aussie Cad. Basic structure I can see right over here straight away is the head and shoulders structure. Like I picked it up. Okay. Now remember, guys, the structures will never be extremely clean. They'll always be, you know, they have a bit of hiccups in them, a bit of different market structures in them, but we do have a nice head and shoulders pattern right over here. Okay. So again, guys, look at this neckline. The market went past it. It's still a fairly reasonable neckline, but look at the shoulder line. It was very, very nice. Okay, there's our shoulder line. This is our head and shoulders pattern. Okay, and there's our head and shoulders pattern. You guys can see the neckline has rejected very nicely. Now, this wick is very high, so it is a bit of a difficult one to look at, which is fine. Personally, if we now look to the left, I would have put my stop loss just above that wick right over there. Okay, so it just cuts out a little bit of extra, a little bit of extra market movement and gives me a little bit of a tighter stop loss, then obviously increasing my profit risk reward ratio. Okay, so you can see there's our zone, right, including those little wicks. We saw a nice rejection. You guys can see, actually let me zoom in here a bit for you guys so you can see it a little bit better. Okay, so obviously this is our zone right over here. You guys can see we've had those 3 wick rejections that I spoke about earlier, so we can see 1, 2 and 3 right over there. Nice close. We actually, if you weren't comfortable taking that trade, we had a big engulfing close. So stop loss above here, entry, and the market later on. Now this trade hasn't really done a very nice big move, so it is a bit of a difficult one. We're seeing a lot of, bit of consolidation here. Obviously start on Monday, it has been, a bit quiet. So obviously last week was full on news, so we had some bit of a hectic market movement as well, and now the market's trying to just get back into a relaxing state. This is obviously right now it's the 10th of May, so if you guys are watching this in the in the future, the previous week we had a lot of news come out, which did affect the markets quite a fair bit, gave us a little bit of uncertainty in the market. Okay, but nonetheless the pattern is still played out. Beautiful engulfing close, entries, stop losses, and now obviously targets. We'll just have to look, just going to have to look at support / resistance zones. We did reach a very nice target zone right over here. You guys can see, so there's our entry, there's our stop loss. So you guys can see it's just about a 2-to-1 risk reward ratio trade. You could have, if you wanted to, be a bit cheeky and put it above these wicks right over here. Now I would not feel too comfortable with it, but it is still worth it, and you get a little bit of a bigger trade. Okay, so this is option number 1. I'm gonna jump over to Aussie ADJPY. Here is a bit of, this is the one I was talking to you guys about before, that third example, right? We have our consolidation zone right over here. You can see there's our consolidation zone, the upper resistance as well. Okay, and we had obviously all these internal structures also. This is a big consolidation zone where the market's going to reject into. If we have a look, especially here at the left, we see these sort of candle structures being very tight, close to each other. Pull it over to the left, and there's our zone of entry. Now, we broke this high. This is obviously a double top that's been broken, and this is the reason why I don't like to trade just broken double tops. We even had a nice little rejection. So if you did want to trade a break of this resistance with a break and retest, you would have gone stopped out, obviously, which is perfectly fine. In trading, this happens all the time. Market would have dropped. Now obviously I'm not going to just take a trade based on that big drop, because massive stop loss. So I'm going to wait for a bit of confirmation. Now I look to the left, I see this nice resistance zone. Market pushed back up to it and rejected with a big, beautiful engulfing candle. Now if you weren't comfortable with that one to take the trade, the very next one created a very big wick, massive wick, rejected back into the zone and closed back down here again. And there's your first entry. Okay, so there's your entry. We have entry, stop loss. I'm going to go, so here we have a bit of a resistance, so I'm going to go just above the zone, obviously, and I also had a big confirmation candle, so stop loss above that zone, leaving a little bit for the spread, depending on, the spreads here at BlackBull markets are extremely tight, so you don't have to worry about that too much, but you should usually leave a little bit of room for it. Okay, take profit down here, a little bit tight, down here on those candle closes, next support, beautiful, just maybe above a 3-to-1 risk reward ratio trade. Okay, very nice entry, stop loss, take profit. Okay, very nice structure. Let's move on to AUD/USD. We'll quickly flick through the charts. Okay, AUD/USD obviously had a very similar structure. We saw that again. I'm not going to waste too much time on this because it's pretty much the same. We had that resistance zone, obviously consolidation, market rejected onto it, big nice rejecting wick, trade to the downside, push for the lower. So let's move on to something that's not Aussie related, because we've already had a look at that. So CAD JPY, okay, CAD JPY, this one is very nice as well. It is a little bit of a difficult one to trade into, and we had no real rejections here. Okay, so if you guys have a look at, I'm going to cover this. Now remember, it's always easier to say, oh, you know, let's look at charts in hindsight. But if you want to look at them in real time, this is what we'll be seeing. Okay, so the market's now starting to form. Okay, as we pull it along, you guys can see there's nothing really that makes you think this market's going to reject. Until you see if I can get it. There you go. Now you guys can see that looks like a rejection, all right? You can see a very nice clean rejection in the market. Okay, until you need to also understand when to look for zones, right? So if you guys have a look at our zone, right there. Okay, we see support, we see resistance. Even if we pull this back a little bit further, right? A little bit tighter up to those levels. We can see again, very similar areas. Support, resistance, consolidation, support on the zone. Okay, now we pull it, finish it up. You guys can see nice, beautiful big wick rejection, engulfing candle. There's your entry. Okay, market has not quite reached our target yet. So, but we had entry. Okay, stop loss. Obviously, big wick rejections, just above that zone. Take profit. This take profit is a little bit difficult. We're starting to run into market structure now that we're getting in. You know, we've had a clean chart movement over here, but we did start to see a bit of struggle over here. So personally for me, I would like to put it, as we use these internal support / resistance zones for entries, we can use them for take profits as well. So we can see right over there, you see a support, we see resistance, we see support, and consolidation zone right over here. So there's a take profit target, beautifully reached it, went just past it, and rejected it. Okay, so there's our nice entry again, about a 3-to-1 risk reward ratio trade. Very nice. Let's have a look at, I want to see Euro JPY. I don't see anything on Euro JPY. We had a bit of a something here, which does look quite nice. Okay, let's have a look at that one. That is actually a fairly nice pen. I want to pop it onto the 4-hourly, sorry, the hourly, pull it across. Let's see if we can find it. It was right over here. There we go. That is very nice. It's a bit of a break and a retest as well. Okay, so let's have a look. Break this one down for you guys. Okay, so what we've had this support / resistance zone right over here. Okay, and then we also had this internal consolidation zones right over here. Okay, so there's our first initial lower high. All right, so there's our high, there's our first lower high. Okay, so you guys can see we also had a nice beautiful engulfing candle. If you guys weren't comfortable trading this one, that's perfectly fine. You had a second opportunity to go in here. Your take profit, sorry, your stop loss would have been a little bit larger than what you would have liked it to be, but we have a fairly big profit target. Okay, so let's say we did take it on this massive engulfing candle. Okay, remember we're swing traders, so we're not too fussed about how big our stop loss is most of the time, as long as we can get a nice big risk reward ratio. Entry, stop loss. Oh, okay, let's pull it a bit tighter. Now you guys can see where I put my stop loss. Look at this. We've had resistance. We've had more resistance over here. And there's a little bit of a wick touch over there as well. Okay, so we actually had a bit of a double top. If we do want to drop it down to the 30, 15 minute time frame, we can see there is a nice little double top present as well. Okay, so entry, stop loss, take profit. I would have put my take profit when the start of this consolidation zone right over here. Big, quick, beautiful drop, bit of a rejection, struggled to move back up, and finished off with a clean jump to the downside. Okay, all right. So let's have a look. I want to see some. I want to try. Hopefully, we can get some examples for the market that goes back to the upside. So let's jump over to see if we can find anything on Euro USD. If we can see any sort of structures on Euro USD, I don't really see anything here at all. Here on Euro USD, we have a bit of a zone re-entry here with our first lower low. Okay, lower high, sorry. So let's get rid of this line. Okay, we have 4-hourly term time frame. So we have consolidation zone. Let's have a look here. Yeah, I guess you can use this one. There we go. Beautiful. All right. So these would have been a bit tricky because our zones are fairly big. You know, these were not. I wouldn't really consider these as lower high as lower highs because there's not any major correction. Okay. This one would start to look like one, obviously, but this candle for me personally is way too big. Okay, I really don't want to trade this considering, you know, if we have a look at where that candle closed. okay, we closed on support as well. All right, so just be aware of that. Okay, we did close on support, so I'm not very comfortable with it yet. And then we had obviously this big drop, big wick rejection. For me, you know, there's no real trade. And then we had this beautiful rejection. We can see it actually looks like, if we draw some lines up over here, we can actually see that this market has pushed down, pushed back up, and come back down. Okay, so this is a nice correction if instead of looking at this one over here. Right, it's not really significant, but this is fairly significant. Okay, so keep that in mind. Put everything to scale when you trade. If you're trading on the 4 hourly turn time frame, use 4 hourly corrections. Okay, this is not over here. That's not a 4 hourly correction. Okay, that's also, this is starting to look like it, but we can see big corrections over here. Nice big corrections when we do hit this. Now, for example, I'm also not going to use these because look at the scale of the move. That's not a 4 hourly correction. Not really. We're getting there. Okay. Very nice. Look at that big, you know, if you look at it to scale, all right? Look at it to scale when you trade, okay? Don't just take any trade because you're scared of missing out. Remove your emotions from your trading and stick to logical, you know, be logical when you trade. That's really what we want to be. Don't be greedy. Don't be scared. Just trade what you see, guys, all right? But anyways, so we had that close. I'm going to get rid of this line. So we can have a bit of a, now obviously, that right there for me, okay, I'll zoom it in a bit. That right there is not a solid rejection, okay? No engulfing candles. We still have the major, you know, strength to the upside. So now we can use our, looking at these consolidation zones right over here. This is a strong resistance zone. So I'm going to go ahead. We can also see we had a bit of candle rejection right over there, okay? So I'm going to go ahead. When I take my trade, so entry would be right over here. But when I put my stop loss, I'm going to put it above this zone that I have here. Okay, that's where I'm going to put my stop loss, okay? Above resistance, above more resistance, and above support, okay? That's where I want to put my stop loss to be safe. And obviously target zones, the Euro USD, the Euro has been strengthening a lot, so we've got a, you know, we can see, looks like I had a support back down here. So let's have a look here at the daily time frame. Okay, there's a bit of a target, so we have a nice low coming up over here. There's a nice target. Let's zoom back in onto the 4 hourly, see what we had. Beautiful trade, okay? About a 3-to-1, maybe even 4, it looks like a 4-to-1 risk reward ratio trade. So entry on that close, no big confirmations, stop loss above our zone, right? Because that's where the strength lies, and then take profit on that daily or even weekly support coming up. Okay, so I hope that did help you guys. Let's maybe, I want to have a quick look at gold because obviously I have not, interesting. Gold is setting up, a very, very, very nice setup of a zone re-entry. Okay, so we had, obviously the market has, we even have a little one right over here as well. Okay, market dropped down, here's one as well. Okay, there was a nice zone re-entry over here, nice big wick rejections. Okay, see, neckline does not really matter, but we had the rejection on that shoulder level. Okay, now let's have a look at this. We saw market break past. This is a bit of a big one. It's more of a break and a retest really. But we had, sometimes, you know, the consolidation zone doesn't really look that great, but we still had that nice into the zone, came back on the bigger time frame, okay, into the zone and came back and rejected down onto it. We also had that sort of internal area as well, okay. But again, look at this. This is not this bigger picture. This is not your basic head and shoulders pattern, okay. 4 hour looked a bit better, okay. It's not your basic head and shoulders pattern, guys, right? Where's my tool? So we can see, right? This is the structure that I'm looking at. Okay, it's not your basic head and shoulders, right? There's lots of mess over here, but what I'm looking for is rejection on that zone. And like I showed you guys before, dropping down to our hourly turn time frame, zooming that in, we had that structure play out wonderfully on that initial rejection right over here. You guys get that idea, all right? It's a nice zone re-entry structure right over here. Okay, right? So like I said, I hope you guys did enjoy that. If you have any questions for us, or if you want to see us analyze any charts, we do love doing analysis for you guys as well. So if there are any charts you want us to analyze, let us know down below in the comments. When you've subscribed, comment down below letting us know you've subscribed, and we'll get back to those comments as well, guys. From us here at BlackBull Markets, thanks so much for watching. As always, stay tuned, trade safe.